WealthLab 8 users, Glitch here. Welcome to another episode of WealthLab Key Concepts, where we'll talk about important concepts in backtesting and or WealthLab specifically. Today, let's talk about transaction weight. What is transaction weight and how can you use it to get consistent backtest results? Let's start by creating a simple building block strategy. And we are going to delete these two blocks and we're going to buy at a limit stop. And let's say we will buy at 1% below the current bar's low. And we will sell the next bar. So we'll try to get these sharp downward movements and then sell on the recovery of the next bar. For our strategy setting, let's do a portfolio backtest on the NASDAQ 100, our wealth data NASDAQ 100, which accounts for survivorship bias, like we learned in the last key concepts video. We'll use $100,000 starting capital, 10% of equity position sizing, and a margin factor of 1.1. So let's go click Run Backtest and see our results here. So we got a profit of 3,000% over the 10-year period. That's looking good. Here's our equity curve. So the one thing I want to point out now is that if you run the backtest again without changing anything, and keep your eye down here on the profit here on the status bar. The profit changed. It went from 3 million to 3,500,000. And if I run it again, it changed again. This time it's 3,200,000. If I run it again, every time I run the backtest, this time it's only 2,500,000. What is going on? Each time I run the backtest, the profit changes. That doesn't seem very good. What's wrong with this software? Well, it's actually by design, believe it or not. The issue is, since we're backtesting on the NASDAQ 100 symbols, we're getting a bunch of signals, 100 signals every day, every trading day. And we only have enough capital to take at most maybe 10 or 11 of them with the margin that we did in the 10% of equity position sizing. So not all of those signals will be able to be taken. So what does WealthLab do? How does it determine which of those signals to actually fill? Well, it's determined randomly. So that's why every time you run this backtest, you're going to get a different result. So let's go back to the design surface and add a condition. We'll add the transaction weight condition. And this transaction weight, what it does is it assigns each trade a weight value. So the higher weight value, the higher the priority that WealthLab will take that trade. So it's a way to get consistent results in cases where you have more entries than available capital. So what you do is you specify a weight indicator, and the default is RSI. We could change it. Let's say we want to weigh by CMO, Shand Momentum Oscillator, and we'll give it a short-term parameter of 4. So, and what we want to do is prioritize the symbols that have the lowest Shand Momentum Oscillator value. So we want to, the ones that are more extremely oversold in the short term, we want to give them a higher weight and therefore more likely to be bought. So let's look at our equity curve here and run the backtest again now that we made that change. So this time we're at 2.4 profit, 2.4 million. Let's run it again and see if this changes. And it actually did change. So what happened here? I thought transaction weight was supposed to prevent these changes. Well, let's take a look at a chart and let's observe how the CMO4 operates here in the chart. So it reaches extreme overbought levels of 100 and extreme oversold levels of negative 100. So what this means is that there were cases where multiple stocks were all at this negative 100 level. So still, there was a case where the entry had to be determined randomly on top of this transaction weight. What if we change the indicator back to RSI, something that is less likely to sit at an extreme oversold level that's exactly the same as one of the other stocks? So let's run this again. So now we are at 2.380, and we'll run it one more time. And we are still at 2.380. So the RSI indicator in this case does not get pegged at extreme levels like the CMO did. So all of the values were different for all of the stocks. So therefore, the transaction weight was unique. So that's it, folks. If you want to get consistent results in your back tests and you don't like seeing the different results every time you run the back test, personally, I do kind of like it because I like to see the different variations that might occur in the strategy. But if you don't want to see that and you want consistent results, use the transaction weight. And if we open this up as a C# coded strategy, you can then see how to employ transaction weight in code. So you'd basically take the transaction instance, which is the result of the place trade, and then assign the weight value. So notice since we want to assign the lowest RSI values to have the highest weight, this code is multiplying it by -1 here. So I think that covers it. Transaction weight, how to use it, what it is. That's another WealthLab key concept. Thanks for watching, everyone, and see you next time.